Hello guys, welcome to Stylz-pips Forex Empire. This is Sage Chino. Welcome to our first recording, to our first YouTube lesson on introduction to online markets, right? So here I'll be introducing you to what we call Forex trading, and our aim for this lesson is actually to introduce you and to educate mankind to online markets through fundamental and technical analysis. So on this channel, that's what we'll be focusing on, right? How to analyze the markets using fundamental and technical analysis, right? So the first thing that we should actually understand is we have different type of markets that we have, right? To start with, we have what we call financial markets, of which that's what we are going to be focusing on mostly on this channel. So financial markets, they are referred to as currencies, right? And we trade one currency against another. For example, we have what we call GBP, USD, Euro, JPY, EDC. There are a lot of currencies that we can talk about. We'll explain further on those. Then we have the stock market, right? On the stock market, we're talking about companies like Apple, Google, Amazon that can be traded on the New York Stock Exchange. And in Zimbabwe, we can talk about companies like National Foods, okay, that can be traded on the Zimbabwe Stock Exchange, right? Those are the stocks that we're actually talking about, right? So in each and every company, we will have a stock market that you can trade in, right, depending on the country that we are in. Then we have indices, right? So basically an index is a measure of a stock market. For example, Nasdaq, right? Most traders know Nasdaq. It's an index for the 100 best technological companies in the United States. So it's under the New York Stock Exchange. That's where you can find Nasdaq, right? So we'll also be trading indices. We'll also be talking about indices in our analysis that we'll be doing, right? We also have what we call synthetic indices, of which it's the one that most traders trade locally here in Zimbabwe, right? So from the name synthetic, you can tell that it is a man-made market. That's a simulation of the real market. This can only be found on one broker, that is the Reef, that I know. I don't know if there is another, which happens to be our main broker for all the markets that we'll be trading with Stylz-pips Forex Empire, right? We'll actually find all the markets that I've mentioned above, right? So the last market that we'll also be touching on this channel, we have cryptocurrencies, right? So these are digital currencies in which transactions are verified and maintained by a decentralized system using cryptography, right? Rather than a means of decentralized authority. It's not decentralized, so no government is in control of cryptocurrency. So if you talk about cryptocurrency, that's where we're talking about Ethereum, that's where we're talking about Bitcoin, the well-known Bitcoin that we always talk about, right? So the strategies that we'll be teaching you here will kind of cover these markets, right? They'll enable you to trade in any of the mentioned markets, right? So from what we'll be teaching you, you are going to choose the very market that you are more comfortable with, right? So there are many other markets, but our focus on this channel will be limited to these markets only, right? So as I'll be teaching, as we'll be going, if you have any question in any of the markets, be it a setup, be it an analysis, you are free to ask us pertaining to that, right? So let's go straight to the online forex market, online forex trading, right? The financial market, right? The first one that I have actually indicated before, right? So the forex exchange, also known as the currency of forex, that is FX trading, is the world's largest decentralized global market where all the world's currencies are traded, right? The forex exchange market is the largest, and the need to exchange currencies of different jurisdictions is the sole reason why the forex market is largest, right? Hope you understand that, right? Currently trading with a volume of $6.6 trillion on a single day, which makes it the largest market in the world. Imagine, guys, you have your share, right, on that 6.6 trillion. So the market will actually allow you, depending with your skill, to go into the market, then you trade, then you will make what you can make per day, right? So the market is electronically run with a network of banks 24 hours a day and 5 days a week. So basically what we're talking about here, we have you, the trader, right? We call you a retail trader, or us, the traders, we call ourselves the retail trader, right? Then there is the international market there, right? That is giving us the opportunity to trade, right? That is linked with that network of banks, etc., right? So as the traders, the international market there. Then in between there is an intermediary, right? That is the broker, we have what we call brokers. For you to be able to participate in this financial market, right, there is need of a broker who will give you trading platforms, who will give you trading conditions, right, where we trade from, where you deposit your funds, where you do your withdrawals from, right? So I'll teach you more of those brokers and the ones that I'll actually encourage you to use, right? So basically it's a market where you have the international market there, we have the broker in the middle, then we have you, the trader, right? So we are just going into the market with our skills, then we trade with our skills and make what we can make out of the international market, right? So basically let's talk about the business of forex trading. What is it that is expected of a trader, right? Or what is the advantage of forex trading compared to other businesses that we can actually look up to, right? So forex trading can actually allow you to make something, right, or to add to your portfolio, right? So minimum time commitment, number one, we talk about minimum time commitment, right? It's not something that will actually make you to do work from maybe 7 a.m. all the way up to 5 p.m., right? So per day, right, according to me, a maximum of 6 hours a day. That's 3 hours in London market, we'll talk about that, and 3 hours in the New York market, with other traders preferring 3 hours only. That's they will participate only in one session or not in one market, and they will make money, right? So depending with your schedule or depending with how you want to participate in the forex market, it can allow you to just participate for about 3 hours in one session, or 6 hours a day. Out of 24 hours, you can be in the market for only 6 hours and you can make what you can make out of the market, right? So there is minimum time commitment needed, right? Most of the time that we will need maybe it's on learning the skill, developing the skill, or nurturing the skill. That's most of the time that we'll actually need, right? Then we also talk about minimum investment, right? You'll see that unlike other businesses, forex trading gives you the opportunity of investing the little that you can, right? You can actually grow funds from as little as $10, right? Those are the minimum deposit for most of the brokers that we use. But I'm not saying $10 can actually make you millions, right? It can if your skill is so sharp, right? But that's the minimum deposit, meaning the market can allow every person at any level to commit to participate, right? These are the requirements, right? All you need is you registering under a certain broker, you do your deposit, you apply your skill, then you can make money from that, right? Then we have no offices. There is no need of offices, employees, or inventory, right? Compared to other businesses, if you want to open a business, you have to look at a physical location where you have to put your business as. You have to put the offices, you have to employ someone to work under you, you ought to have inventory, right? But according to forex trading, right, there is no need of that, right? All you need is yourself, right? Your laptop, right? And your network connection to others, your Android phone, your iPhone, just your smartphone, right? And your internet connection. Then you can start trading with your minimum investment of $10. Then you can actually start trading, right? So it's an opportunity, or it's a business to consider if you're someone who can only consider those things, right? So let's go to the next thing, right? Having talked about this, right? To succeed, you need to work hard and master the professional skill, right? This is the most important thing, right? As I was explaining the first three things there, right? You might actually think that, oh, it's going to be easy. It's just $10, right? My Wi-Fi in my phone, then I'm good to go and I'll be making money, right? There is need for someone to be focused, right? You will have to treat it like any other businesses, right, which is operated under offices with many employees, right, with huge investment, injection for a start, right? So to succeed, you have to put your maximum effort, right? Be focused on acquiring the skill, and I will emphasize the most important thing in forex trading is the skill. Then we get to making money, right? So the purpose of this course is to equip you with the necessary skill set that guarantees you income for the rest of your life. The advantage of forex trading is a skill that we are teaching a trader, right? You won't be relying on the other person or on the next person. You are relying on the skill set that you have as an individual, right? Whether they remove your hand, still you have your skill, because it's in the brain, it's in the mind, because it's a skill that you have attained. You've taught your mind, you've taught your eyes, you've taught your ears to hear what the market is saying, right? So this is a little bit about forex trading, right? So on this channel, we'll be teaching you, taking you step by step from newbies in forex market up to the level where we'll be calling you a pro trader, right? We'll take you through the course that will actually enable you to attain all these levels. All right, so let's go to the next thing that we have to talk about, right? So like I've said, that minimum time commitment, right? You don't need to be there on the market for 24 hours a day or 7 days a week, right? Let's talk about 24 hours market in the sessions, right? So our market is going to be open for 24 hours a day, right? The market is going to be open 24 hours a day and 5 days a week, right? So the market will allow you to participate within those times that I've just mentioned, right? Then our market is centered in different parts of the world, right? We have what we call sessions in forex trading, right? Like I've said, someone can decide to participate in any of these sessions, right, that I have mentioned. For example, we have what we call the Asian session. So the Asian session, that's this first region that you are seeing that covers Sydney, Australia, Tokyo, and Japan. That's the Asian session, right? Mostly here in Zimbabwe, we are not going to be trading these markets that will be open during these times, because mostly we'll be asleep during these markets. We are only going to participate, or I will encourage you to participate in the London market, right, and in the New York session. These are the two sessions that are kind of good for us, right, because you can't trade during the night, right? I'll encourage you to participate in these very two sessions, right? So our London market is going to be open from about 10 a.m. to somewhere around 3 p.m. to 3:30 p.m. around those regions. Then we're going to have the New York session, right, where the New York market will be open from about 3:30, 3 o'clock, 3:30, depending with the times, right? 3:30 all the way up to 11, 12 in the midnight there, right? So these are the three sessions that we're going to be having, and we'll talk more about these sessions as we go deeper into the strategies that we're going to be teaching you on this channel, right? So you decide, right, if you're someone who is comfortable in working in the morning, right, you choose pairs or you choose instruments that are related to London, right, that are the euros, that are the Great British Pound, right? You trade pairs that are related to that during this session. That's when their market, or that's when those instruments will be volatile or they'll be moving good, right? If you're interested with USD pairs, you're going to be participating from about 3:30 p.m. all the way to the day end, right? That is in the New York session, right? So you choose the times or the sessions that you want depending with your schedule, right? So it's flexible. Then let's talk about some forex basics. Already we are going into the concepts of forex trading. Let's talk about the forex basics, right? So when we say forex trading, or forex is quoted in currencies, when you're saying we are trading forex trading, right, we'll be talking about currencies, right? So forex is quoted in currency pairs, unlike stocks, right? Remember we mentioned stocks, right? Stocks, we say you'll be trading Google, you'll be trading Apple, you'll be trading Microsoft. It's just a company that you are trading in. You are participating in a company, you are buying shares into a company, or you are trading on a daily basis in those markets, right? But when you talk about currencies, right, remember a currency is for a certain country, right? So you'll be trading one currency against the other currency from another country, right? The currencies that we actually have, with currencies like the US dollar, right? We all know the US dollar, the Great British Pound, the Euro, the Japanese yen, the Swiss francs from Switzerland, the Canadian dollar, and the Australian dollar. Those are some of the currencies that we actually trade, the top currencies that we actually trade in the market, right? These are not the only currencies that are there. There are so many, but we'll focus mostly on these currencies that I've just listed here, right? Then one currency is quoted against the other. One currency is given a 3-letter code, right? For example, the US dollar, right, it will be called a USD, right, like you see there, right? When you talk about the Great British Pound, the GBP, right? The euro, like that, EUR, right? The Japanese yen, JPY, right? So that's how all those currency pairs will be named, right? Then successful traders only trade the most common and more liquid currency pairs, right? So like we said, that a currency will be quoted against the other. So we'll form what we call a currency pair. And the examples of currency pairs that we actually have with the Euro USD, right? I'll just give a few examples. Euro USD, we have the GBP USD, we have the GBP JPY, we have the USD card, NZD USD, USD JPY, etc. There are so many that we can actually mention here, right? So these are the currency pairs that are formed by combining two currencies, right? I think you now know the basics, right? So let's get to what we call currency exchange rates, right? So you see that exchange rates will be differing from one moment to the other, from one time to the other. So us as forex traders, we try to make money, or we try to make profit out of the exchange rates, the differences that will be happening in the exchange rates. You'll be buying one currency to the other, right? So like we said, the currency pairs are going to be quoted like this. You have the Euro USD, right? So how it will read, it will be like this, right? So the first currency that we have right to your left there, it will be called a base currency. It's called a base currency. And the other, in this case, is the Euro. Then here we have the USD, right? So this other currency is called the quote currency. It's quoted against the what? The Euro, right? So how it will read, right? You are going to be given a quote price, whether you're going to be buying, you're going to be selling, right? You're going to be asking, or you're going to be bidding. You're going to be given a quote price that goes with what you want to do, the option that you are going to do, whether you're buying or you're selling, right? So at one point, Euro USD, right, will be written Euro USD is equivalent to 1.1302, right? So how you read this, it means 1 euro is worth 1.1302 US dollars, right? So the base currency is always quoted to 1, right? So it means 1 euro is equivalent to this amount of US dollars, right? Then these numbers, this is the price, right? On your chart, you'll be seeing it to your left. This is the price. I'll show you that when I get to that, right? This is the price, right? And mostly these currencies with with US dollars, with euros, right, they'll be given up to 5 decimals. They'll be given up to 5 decimals, right? But here it's represented 4 decimals. I'll explain, right? So let's get to this and explain with this one, right? So if you look at the 4 decimal places that were given on a quote price here, right, the last digit on the 4th decimal is called a pip, right? So it's 1 pip, right? We'll explain pips later, right? It's called 1 pip, right? Then if it is given in 5 decimal places, right, the 5th decimal, right, is called a pipette, right? It's called a pipette, or points, right? So what it simply means here, it simply means 10 pipettes or 10 points make up a what? A pip. It's simple mathematics, right? 10 points make a pip, right? Or 10 pipettes make a pip, right? If we're going to add the 5th digit, it will be a pipette, right? Or it will be a point. Then the next one becomes a pip. So on the 4th decimal place, you're going to have pips. We'll be counting pips as we go. So if we're counting from 8, if we don't have this 1 0 and 1 there, right, we'll be saying 80 pips, right? If we're counting from this one, we'll be saying we have 1081 pips, right? We'll explain that when we get to the charts, right? Okay, so we have other pairs that includes the JPY pairs mostly, right? So they will be given either in 2 decimal places or 3 decimal places, right? So on the JPY pairs that we're going to be seeing, the 2nd decimal place, that's where you start to count your pips, right? A pip basically is the smallest unit movement that you can see on a currency pair. The smallest unit movement that a pair does is called a pip. That's the definition of a pip, right? So 1 pip on JPY pairs will be counting from the 2nd decimal, right? Then if you are given that pair to 3 decimal places, the 3rd decimal place will be the pipette, or will be the point. Hope you know the decimal, the difference. On all other common pairs, right, the 5th decimal place is the pipette or the point. But on JPY pairs, right, the 3rd decimal place is the pipette or the point, right? Hope you understand the pip, right? So that's what I have to explain on currency exchange rates. So what will be fluctuating is these exchange rates, or the quote prices of a certain currency. So our analysis that we'll be making, we will do an analysis, is this quote price going to increase or is going to decrease with time? Then you're going to make a decision out of that, right? So in the forex market, it's either you're going to take a buy trade that is going long, or you're going to take a sell trade that is going short, right? So I'll have to explain what you'll be doing there, right? I'll explain with this chart, and I'll show you the calculation that you actually do to see how much money you have made or how much loss that you have made. It's a simple calculation that you have to understand now, right? So let's look at this chart that I have here. So this chart was actually taken from GBP JPY, the pound against the Japanese yen, right? And price actually moved from this zone all the way to that zone. Take for example, if you take a buy from this zone, what happens in forex trading? We say you should buy low and sell high, right? So when price is at this lowest point relative to the previous point, right? When price is at this very lowest point, we expect to take buy trades, anticipating that is going to move up, right? Anticipating that is going to move up. So when price is at this lowest price, the previous low that will actually reach, if price is at these levels, we expect that price is going to push upwards. That's our anticipation. So if we anticipate that, we're going to take buy trades, right? Meaning the market is going bullish. So if we're going to take buy trades from here, right, then price starts to move in that direction. We start making money, or we start making profits, right? So what it means on this currency pair, it simply means that the GBP, right, has control over the JPY, right? It's gaining value over the JPY, right, when it's moving upwards like this. Then when it's moving downwards like this, what it means the base currency has less power over the what? The JPY. The JPY has more power over the JPY. Thus it pushes the market downwards, right? So let's explain our long trade that we actually have here, right? If you look at these two that I have actually used here to get these figures that you're actually seeing there, let me also do this, right? I think you can see from the starting point there, we have a price that we are seeing there, right? And to the ending point, we have a price that is shaded in black like that, right? So if you use these two that is right here, right, we'll get to the platforms that I'll actually explain what it is and how to use it, right? If you get to the two that you are seeing here and click on this very point and you drag it all the way to this side, it's going to give you these things, right? So let's just ignore this price. This is the current price. The first figure that you're seeing there is the current price that you're just seeing to your right, right? Then from there we have 28 bars, right? So it means from this point to that point, you can see these bars. If you are to count these bars, you see that they're just 28 bars, right? Then the movement from this point to that point, that is, you take this value minus the starting point value, you get the points. Remember, we talked about the points. This is a JPY pair, GBP JPY, and you can see it's quoted up to 3 decimal places, 1, 2, 3, and we said the last or the third digital place is going to be a point, right? So if you look at it, this one, the difference between that price and that price is going to give you 7,831 points. That's what is going to give you. So if you're going to convert these to pips, you are just going to ignore this last digit, that is the pipette, or that is the point. If you're going to read it in pips, so it's going to read 783 pips, right? 783 pips. That's the movement that happened from that point. So that's how we can see, or that's how we can be calculating our moves that we get in the what? In the market, right? So knowing that the movement from here to there is 780 pips, someone will actually want to know how to know the monetary value of that movement. How much will you have made from taking this buy up to that zone, right? So there is a formula that we actually use, right, for calculating our profit, right? Profit can either be can actually be positive or negative, depends, right? So our profit is going to be the number of pips, right, that we are going to get from this movement. The number of pips multiplied by what we call the dollar value per pip standard lot. This is just a standard formula that we use. dollar value per pip standard lot. So this you can actually get it from the website. If you just go on the web, you can search this, right, for a very current pair. You can just go GBP, the dollar pip value for GBP/JPY. It will actually come out, right? And mostly for the most common pairs that will be trading, right, that value usually ranges around 10. It's mostly 10, right? So we'll use an approximation of 10 whenever we are doing our calculations, right? So it's the number of pips multiplied by the dollar value per pip standard lot, right, multiplied by the number of lot size used. We explain lot sizes, right? Mostly our standard lot is 1, right? But for currencies, it goes all the way to 0.01. That's the minimum lot size that you can be using for financial markets, 0.01. And it also depends with the broker that you'll be using, right? So if you take a trade with a lot size of 0.01, you just input it there. Then you multiply with the number of pips and the dollar value per pip standard lot, right? That calculation will actually give you the monetary value that that move represents. So it means if you take a trade with a lot size of 1, we explain lot sizes of 1 from this point to that very high, you are going to make 7,830 something US dollars from that move, right? And when we'll be explaining our chart, our trading platform, right, you see here it's written sell and buy. In the middle there, that's where you put in the lot size, right? The one that we have actually mentioned at the end, this one, right, that is the lot size. The lot size, right, you actually input it there. If you're going to use this one click trading option, you input your one there, right? This one points just from the chart, then the 10 is just a standard value that we get from the website. It always changes, right? But it's always playing around 10, right, for the most volatile pairs, right? Okay, so that's the calculation for this buy trade. So that's an explanation for a buy trade. When we say you have taken a long, you have taken a buy, how do you make profit? That's how you make profit. That's how you make profit. The GBP pay is appreciating over the pound, right? So let's also show you an example for a short. When you say we are going short or we are selling, right, we are saying one currency is overpowering the other, right? Or the base, the quote currency, right, is gaining over the what? Over the base currency. That's when we go short, or when we sell. The formula is just going to be the same. Let me show you by means of this graph. By means of this graph. Okay, so we are saying, remember the statement that I have mentioned before, right, that we always buy low, like we did on GBP/JPY, and we sell high, like we're going to do here on GBP/USD, right? So selling high, we are anticipating that our price next move is going down, right? It has come to the previous highs where it was, and we anticipate that price has to go back down where it was, right? Then we're going to take sales from those points. We don't take sales at the lowest prices that we are seeing. If you look left, right, you actually lose your money, right, because the market has already gone down, right? So we're going to be taking our sales from this region, right? So for this very trade, right, we are saying the movement, if you look to your right on any chart that you'll be using to trading, to the right here you'll be seeing your prices, right? And I've used that too again. Is this very true, right? I've used that too from this point to that point, right? If you read here, you see that the current price 1.34290, right? That's the current price where we are with these bars. These bars are called candlesticks. We explain the candlesticks, we will explain the line charts, the graphs that we use to analyze in the forex markets, right? So the current price is 1.34290. That's the current price. And from here to this point, we have 24 bars or 24 candlesticks, right? Then the points that we have there, right, is 3,156. But remember, we said for our calculations we'll be using pips, the smallest unit movement in the forex market, right? We'll be using pips. So to convert this from points or pipettes to pips, we simply divide by 10. We ignore the last digit, right? So it's something like 300. There's no need of rounding because it's a very small thing, right? So it's basically 315 pips, right? So to do our calculation to see the monetary value from this point to the, if you take a trade or if you take a sell from that point to that point, what you are going to make is this. You use this formula. You just have to keep this formula in head. As you trade more, you'll be knowing it by head. There won't be need of cramming it or doing what, right? So it's 315 pips multiplied by 10. Remember, we said for the more volatile pairs or the pairs that will be trading mostly, right, the dollar value per pip standard lot is going to be 1, though you can check from time to time, right? It's going to be 10, right? Then the lot used, number of lot size used here is going to be what? It's going to be 1, right? So if you multiply 315 multiply by 10, we are just adding a 0, so it's 3,150 US dollars. So if you're going to take the trade from this point to that point on that time frame, you're going to make $3,150. That's what you make from that from that move. So basically I have explained the two type of contracts that we'll be taking. It's either you're buying or you're selling. So you're going to sell high at higher prices and you're going to buy low on lower prices, and as price move to your anticipated direction or to the direction that you want, you're going to be making profit. If price goes against what you want, for example, if we had taken a sell here and price was going to be moving against us, then it means we'll be making a loss, right? And in making that loss, the calculation to see your loss is just the same. You'll be putting those pips, right, to this formula, and the lot sizes that you put when placing your trade there. All these things will cover them, and we'll show you how to do that, right? Okay, on our next video. All right, so that's about taking the trade. That's about the two contracts that you're going to be taking in forex trading, right? Then now let's talk about the 4 types of traders that we have in the forex market, right? Remember we said forex trading is very, very flexible, right? And you trade as you wish, right? You trade as you wish, right? If you look at this chart, let's get back to this chart. There are what you call time frames, right? You're going to be seeing this on almost all the platforms that you're going to be using in trading, right? These are time frames. M1 meaning 1 minute time frame, M5 5-minute time frame, M15, M30, H1, H4, D1 a daily time frame. If you open on a daily, your chart is going to be represented on daily time frames, or each bar or candlestick will open and close after a single day, right? For example, this GBP USD, we had opened the chart on the daily time frame. We have the weekly time frame, right? With 8 hours, 10 minutes, 2 hours, 3 hours, 6 hours, 12 hours, and the monthly chart, right? So these time frames will allow or give traders that flexibility, right? In trading, it's adding to the session. So we said you can trade in the New York session or in the London session, right? You can now as well choose to trade under these 4 classes or these 4 types that we have here. We have what we call scalp traders, right? Scalp traders, right? They do what we call scalping. So if you're a scalp trader, you're going to be taking your trades and you hold those trades for minutes to a few hours, right? That is, you're going to be using the charts that you use to analyze there are the shorter time frame charts, right? From 1 minute to something like just 1 hour, and you just end there. You do your analysis and you take your trades there. If you just want to be a serious scalper, just from 1 minute to something like the 30 minutes chart, you can actually make money from those charts. So they use the shorter time frame charts to do their analysis, right? They are in trades for just a short period of time. They're in and they're out with their money. They just lose a large contract sizes, large volume or large lot sizes to trade, and they make money off that. Those are scalpers, right? Short-term traders for a few minutes to hours, right? Then we have what we call day traders, right? So basically a day trader take trades and holds up to a single day. They don't exceed 24 hours holding that trade, right? They try to make their money within just a day, right? within just a day. So mostly they are just working on the daily chart, right? Not even on the daily chart, they're just working on the 1 hour time frame going downwards. 4 hour time frames and going downwards, right? We explain that when we get to the charts, right? Then we also have what we call swing traders, right? So these traders, they take trades and hold for days to week, focusing on the 4 hour time frame to the day candle closes, right? So these are swing traders, right? They can take the trade today, close after about 2-3 days, holding their trades. They are swing traders, right? So you can take a trade today, you close it maybe next week Monday, right? Then you are a swing trader, right? Then position traders, right? We have what you call position traders. So these guys, they hold trades for a long period, right? So they take trades and hold for weeks to months or even years. These are position traders. So when they're doing analysis, when you choose to become a position trader, it means you are going to do your analysis from the daily time frame, weekly time frame to the monthly time frame, right? Those are the highest or the high time frames that you'll be doing your analysis from as a position trader. If you're a swing trader, from the H4 time frame to the daily candles or to the daily time frame, then you'll be doing your analysis from there, right? So our market will enable every trader or every type of a person to participate, right? So it's so flexible. You just choose the trading style that you so wish to trade with, right? So on this channel, we'll be showing you different types of trading strategies, right? And you can choose from those strategies, right? Then as we conclude on these lessons, right, basically our strategies can be applied in the same manner across the listed markets, right? It can be applied in the same manner across the listed market, though we'll have some few differences or some things that we'll just add for specific markets in our trading. But the basics or the foundation, it will be applicable in all the markets. We treat the markets just the same, be it the crypto, right, be it the financial markets. We just take them as the same, because the graphs, they present themselves in the same manner, right? So be flexible as we learn, since examples can be taken from any of the markets. Don't get confused, right? So why I'm saying this is because I'll pick some examples in my explanations or in the foundation, so that I will cover the whole scope, right? I'll pick some examples from different markets, right? So just be flexible, right, and learn the chart, right? The first thing that you have to do is to learn the chart before you approach any of the markets. If you understand the chart, then you can be a participant in any of the market, right? If you're a Bitcoin trader, it's not just a matter of you just buying and holding. You have to know the best price to go in, right? You have to know the best price to exit, right? You have to know whether you're going to hold that trade, right, or you're going to sell that trade. For example, there are traders who actually got into Bitcoin, and they were buying Bitcoin when it was around 61,000, right? And the moment they got into the market, it started dropping, and it's been going down since they entered into that market. So remember the frustration, right? Why? Because they didn't know the rightful price to go in. The only thing that they were told when buying Bitcoin, they were told just buy and hold, just buy and hold, right? They might make profit in the long run, but it wasn't the best point of entry. So if you're a trader like us, you knowing the best point to enter into the market, you wait patiently till price comes to where you want, you go in, then you hold and maximize on the profits, right? So our introduction for the market is a general, then we'll go deep into specific strategies for specific markets that we've mentioned above, be it the synthetic market, the financial market, right, the stock market, or the crypto market, right? So as we conclude, we have different trading platforms that we'll be using, right? And I will encourage you, because of the tools that we have there, I'll encourage you to be using what you call MetaTrader 5. We have MetaTrader 4, we have MetaTrader 5, right? So I'll encourage you to just be using the MetaTrader 5, because it's an update of the MetaTrader 4, right? It has many tools or more tools compared to the previous one. It's an update. You know what update means, right? So we're going to be trading, or we're going to be registering our brokers under these platforms, right? Or our brokers will offer us these platforms to trade with. For example, Deriv is the broker that I'll be using, right, when I'm explaining anything, right? So I use MetaTrader 5 under the broker Deriv, right? Then we are also going to be using what we call TradingView. This one, if you go on the website, then you just search TradingView, it will come out, right? So for most of our analysis, we are going to be using TradingView. It gives the best platform or the best graphs to use for analysis. But on executing our trades now, that's when we will be using our platforms that we'll be having on MetaTrader 5. So what I do, basically, I do my analysis with the TradingView. But on execution, I'll be executing my trades on MetaTrader 5. Right? That's what I do. Why? Because different brokers will offer different charts. Right? But the TradingView will give the best charts that are just international and that can be used from every other point of the satellite, right? So I'll encourage you to have TradingView by your side and your MetaTrader 5. Then you'll be comparing your charts, but on execution, MetaTrader 5, on analysis, our TradingView, right? So I'll give you a link to, if you want to open your account for the first time, if you don't have an account, right, I'll just drop a link in the description below, right? Then you just follow that link, and I'll also drop the steps to follow on how to register your first account, right? So that you register your first account, and when you get to the second lesson, third, fourth lesson, right, you already have an account registered to a broker that you choose, or the broker that I'll give you, right? Is a link, right? So that will move together. So when I'm explaining on my charts, you'll be having your charts by your side, so that you go and practice whatever that we are going to be learning on this channel. Hope this lesson was so helpful to introduce you to what we call forex trading, right? On the next lesson, we are into the work and we are on the charts and analyzing the charts, right? So thank you for your time, and thank you for following our channel, right? I'll encourage all of you to subscribe so that you get every other update that we will send to this channel. Thank you.